And maybe we start with that point, like I mentioned, the sovereign wealth fund. So we finally get it done. We have the board. So we hopefully we'll see that $1 billion getting invested. But for me, I think the big question mark in this whole process is we have the sovereign wealth fund, but we still have the excess crude account. It hasn't been totally clarified if we are done with that excess crude account, which many people are calling illegal.
Good morning, Wole. You make a very good point. I think by and large, first thing to state is that it's good that we're making some progress in terms of kicking off the SWF. As far as the continued existence of the ECA is concerned, I think that's been a bit of an issue as far as the governors and the federal government have gone about it. We've first heard of court issues and then heard of court settlements, which it's difficult to ascertain what exactly the resolution position is right now. But just taking a cue from the events thereafter, especially the setting up of this board, I think it will be very difficult for the federal government to make active progress without having come to some sort of agreement with the governor, so to say. My view is that basically in the light of the fact that the SWF really, by virtue of its creation, should replace the ECA as a more constitutional entity, I think it behoves the federal government to ensure that that exactly is what's going to happen in terms of how it's structured.
Well, like you said, that's the ideal, and hopefully we'll see that play out. But let's move back to the markets. Of course, Mansard Insurance, former GT Assurance, released numbers yesterday. Very positive numbers. We saw gross premium up 26% to 2.4 billion. We saw pre-tax profits up 38% to 1 billion naira. But for me, the key takeaway is the impact we're seeing, or should I say the drag on profits from net claims, and of course, the boost on profits from investment income.
I think by and large, the results with Mansard are basically reflected what's happening with the broader industry. For a lot of the big players, you've seen gross premiums really grow because they're basically just taking over larger portions of the market share. For Mansard in particular, it's basically driven by their oil and gas business as well as what they're trying to do on the retail front. The oil and gas consider about 20% of gross premiums in full year 2011. They decided to try to grow that significantly this year. You can see what that's done in terms of their gross premium numbers. The retail business basically was supposed to be driven by e-platforms, which sort of creates access for individuals to be able to sign up for insurance for virtually everything they want without actually having to go through middlemen or visit offices. Obviously, that's been very useful in terms of revenue. But a good point you made as regards claims. I think what we're hearing out of the industry is that it's broadly due to changing attitudes on the part of their customers. First, there's the issue of awareness on the parts of those who are signing up for insurance because inevitably, as we try to grow premiums, the education of the need of it also falls into customers in terms of education as to their rights for those claims. I think the second leg of the industry attribution to the net claims relates to the sense that we're getting a lot more people because of economic constraints trying to ensure that they don't fritter away their disposable income on what insurance should legitimately pay for. So we're seeing that as well filter into net claims. But I think as far as capital market side is concerned, in terms of what augmented their profits, for the most part, we've seen very attractive fixed income yields. I love.
So it's really a fixed income story, you think?
Fixed income, but supported by equities as well. I think NSE is up about 12% year to date, so it gives them a lot of flexibility to sort of boost their profits that way.
Well, of course, that number was up 95%. I mean, that's very significant. Well, let's talk a bit more broadly about the sector. We see on the NSE very little interest in the insurance sector. We're seeing many of them trade close to their nominal value. For you, what's the game changer here? Do you think we will still only see a few companies? Like, of course, we are seeing already GT Mansard now, and CONSTITUTES and Allied Insurance, ICO, several others being really standing out amongst the, I think, about 40 companies we have.
Yeah, I think for the most part, the game changer for the insurance sector will really be sustainable growth. And to achieve that, we think that, consolidation becomes inevitable. What I said earlier was about, a lot of the larger companies sort of trying to take up market share. But there's also, a bit of loyalty, if you will, in terms of insurance business in Nigeria. If you look at the fundamentals, it's really skewed in their favor and doesn't really warrant the sort of very low valuations that we're seeing. On average, price to book within the insurance industry is between 0.25 and 0.4 times book value.
So you think oversold.
Which is, absolutely his. But I think the concerns for investors will be from what platform will you be able to sustain that sort of growth going forward. And I think in that regards, new initiatives regarding both NICOM and PIB, are going to be very critical for the outlook for the sector. But I think for us, as far as individual players are concerned, the idea really is to avoid the sort of fragmentation that we're seeing right now. We need to get a situation where a lot of those players come together and have such an equity base where they can actively, take on risks within the economy.